And then with a bit of luck, we're also going to get around to some interesting altcoin discussion as well. So Tom, how are you doing today?
Brilliant, thank you, Charlie. Yeah, it's been a fantastic day. I mean, I think we're all a bit surprised about Elon Musk's tweet last night. I know I am.
Well, do you think the space would be better off with him or without him, frankly?
Well, I mean, since we put quite a high merit on transaction value, I'm not sure a couple of Teslas being bought with Bitcoin is going to do much for our data. But it's nice to have a big name. I think he went a bit too far with things like Doge Father. But I want another Stanley Druckenmiller, not another Elon Musk.
Yeah, well, he certainly the volatility love him, don't they? Because he seems to cause the unexpected moves. But I think that you look at Tesla, and it was always a bit for me. For me, it was always a bit of a strange one that the whole EV thing is deemed to be eco. Whether it is or isn't, another conversation that's outside of. I'll leave it here. But the EVs really tap into the whole idea of eco thinking, and Bitcoin doesn't sit well with that. I mean, we're not going to get into the ESG conversation. We've done that many times before. But I think this week we've had a volatile week. Tesla stock's been under pressure, going below $600. So I guess he's got to wonder, because I think it was about one day after he bought Bitcoin was peak Tesla price, and so it hasn't. I know they made $1 billion, but it hasn't actually worked out for the share price too well.
No, I totally agree. I think also, just to briefly touch on it, I think the letter came across as a bit of a kick up the backside from the board. I think they've given him a large playing field with Bitcoin, and I think they have to rein it in a bit. Did you see the Reuters article? They were saying that the reason why he did it was to try and get behind Biden's credits.
Of course, because most of their profits until recently, in fact, their only profits when they got into the S&P last year were courtesy of credits. So, when you're a top 10 S&P company, you can't fart around on Twitter. You really can't and do these things. But he does. He'll continue to do so, but it's not going to work out too well. Excuse me. So, I think this week I wrote about the sort of smash in the tech stocks, and the fact that I think it was last Friday, we had a downdraft, and we had it again on Monday. And Bitcoin's correlated. It is. I think that there are times in the cycle where you can expect it to detach itself. For example, in Q4, when it really was, when you saw the explosive growth, when it's that good, then it can behave differently. But the rest of the time, it really is a very different situation, isn't it? You can't escape the fact that the big macro forces and the behavior of assets, tend to stick together. And it's a risk-on asset, as I've constantly said, and it's got a history of tech. It's internet money, and that whole internet money thing is really important to understand, because Bitcoin is the new gold. It's the new gold of the internet. It's not the new gold of the real world, and that's a very different thing. I don't think it'll ever be the gold of the real world, but it may well always be the gold of the internet. And let's face it, the internet needs its own version of gold, doesn't it?
Yeah, just to touch on that point, you've been saying that Bitcoin and tech stocks have been correlated for quite a while. I think you're probably one of the first, actually. And I think from your recent article, we've seen that they really do have a correlation. And why do you think that is? I think obviously they have a correlation with respective stocks as well. But do you think because people are ignoring the real link between the internet boom and this internet money, if you like?
Yeah. And it's also it's 2020 is a very special year for the stock market. It will go down in history. It will forever be remembered. Just like 1999, when crazy stuff went up irrationally. And I don't dispute that the companies that have done well are innovative and may well survive and thrive. But the share price is another matter. You could have paid for the profits in the year 2050 already. And that's what we saw certainly in the last boom. There weren't many companies that were materially undervalued. Amazon is the obvious one that was, but it's only because they innovated their way through. They were a very different company in 2005, 2010. They were in 1999. So they massively changed their spots. I think they're a big acquirer in the early 90s. behaving more like a VC to some extent. I know that, I just read the book, but yeah. So it's not a great shock to me that Bitcoin's a risk-on asset. And if tech goes down, then Bitcoin is going to go down. And I think the relative argument on Bitcoin versus the Nasdaq, which by the way has been a pretty good chart to observe over the last few years, it does seem that it's started to underperform. It'd be very nice for Bitcoin to see a relative high against Nasdaq in the next few months. I don't know whether it will or won't. But certainly our fair values are now coming through at about, the longer term ones, at about 40,000 now. So we were saying about 35,000. So the underlying network is pretty happy here. The danger, of course, of Bitcoin is the network starts to fade away. But that's not happening. So, but at 50K, then Bitcoin slightly overpriced, but not massively overpriced. I'm still very, very skeptical of the idea of very, very high prices this cycle. Simply because who's going to buy it? Who's going to pay the money? I mean, as you know, we've got 1 million coins to sell over the next 3 years, and the fund flows, as we publish at ByteTree Asset Management, are hardly positive. They're very, very slightly negative, not massively negative, but very slightly.
I think that's a great point. And so, with only 1 million coins to sell, how else can people sort of buy a Bitcoin, if you like, or indirectly buy a Bitcoin? You touched on MicroStrategy. They're probably the biggest equity that is related to Bitcoin. I just had a question on, you also mentioned Grayscale as well. So do you think the play really, it's a better play to buy a MicroStrategy at the start than it was to invest in GBTC?
Yeah, well, GBTC was on a massive premium, and last summer, or late last summer, and MicroStrategy was just MicroStrategy, and then they started to buy the Bitcoin, and it went to a premium, and that premium peaked, according to my chart yesterday, 250%, and that's now eased back to about 20%. So basically, MicroStrategy, if you assume the original company without the cash is $1 billion software company, which I think is, might be a bit higher, might be a bit lower, but it's not going to be massively wrong. And then you've got a big pile of 90,000 Bitcoins. You're just paying a small premium above that. I think in the bottom of a bear market, that will go to a discount. So MicroStrategy would be an excellent trade on the way up. And I just pointed out a scenario where their break even was. I think their point of insolvency is 8K. So there's a huge buffer, but so it's a pretty safe thing to buy at the moment. But obviously, if you're an institutional investor and you can't buy funds, then MicroStrategy is not a bad bet right now because the premium's quite low. But it's falling. So premiums across the board are falling. We've had the Grayscale Trust, touching 20% at one point, to close over 20%. They keep putting out statements saying that they're going to try and become an ETF. But I just don't know how possible that is. I mean, if they can do it, then they should. And of course they want to do it. I mean, the Canadian funds are all rapidly switching into ETF structures so they can buy back. So you protect yourself from discount. And I think there's a lot of naivety where people think premiums are a good thing. Premiums are a disaster because they don't last. So it's good to have a premium if you can have one forever, because then you've got cheap equity or you've created value in some way. But knowing that it's going to disappear at some point is frightening for a holder. So I think these things are pretty scary. And the case of Grayscale, I have no idea what the legal situation is, but it's a trust structure which I gather is quite hard to shift. I mean, they're saying they can do it, so I hope they can do it. But if they can, then there's no reason for that discount to exist, and so it would be a screaming buy. So I think that Tom, you did a law degree. Can't you help us here?
I think there's a bit of a stretch between you and this, but I'll certainly look into it.
Yeah, well, it is a legal situation. Well, let's move on to Taproot. You wrote a piece on Taproot this week, and tell us what it is.
Sure. So Taproot is a Bitcoin improvement proposal, also known as BIP. And actually, Taproot itself has been in the media recently because I think when it comes to anything with improving a network, people might get a bit skeptical, a bit worried. It's quite a big change. And actually, it's part of a proposal called BIP 0341. And this is a number of different features to this proposal, Taproot being one, but actually, as I identified in my article, snore signatures are probably the biggest aspect. And essentially, without going into too much technical detail, the overarching aim of this proposal is to improve Bitcoin's efficiency, privacy, and compatibility with future more complex transactions. So what I mean by that is things like contract transactions, or things with multiple signatures or multi-sig transactions.
And so basically, this is one of the several upgrades that has taken place. People think that Bitcoin's fixed, but there is a dev team, but there has to be a consensus in the mining for them to accept it, and so it will go ahead, but it requires a bit of internal politics to make it happen.
Yes, well, as today is quite a good day to do this.
Right, Tom, your reception's gone funny, and so I'm just going to crack on until I can see your head move. In the interests of our audience, you're moving again, right? Carry on. Please say what you were just saying.
So today is a good day to difficult start of the new block.
Right, Tom, I'm going to have to stop you there because you are cutting out, and I don't know why. So if you could sort of wiggle some buttons and things, and then I'm just going to do a question. So a couple of questions that have come in. You've tweeted about the highest difficulty adjustment ever. Difficulties up and prices are down. Hasn't Elon just caused major congestion on the network? Well, the difficulty adjustment up is just a response to the fact that it collapsed a couple of weeks ago when the miners switched off in China. And it just takes time for that to all settle down. The difficulty adjustment, all it's trying to do is make it harder or easier to mine in order that blocks come every 10 minutes. And when there are too many blocks, it becomes harder. When there are not enough blocks or too slow blocks, then it gets easier. So I just think we've had the aftershock of that, and it's a normalization process. Right now, I think I'm right, the last time I checked, that the average block time is 500 seconds, and it should be 600 seconds. And Tom, you're moving, so I'll come back to you. So the next difficulty adjustment in 13 days' time, once again, will be sharply higher, making it less profitable to mine Bitcoin.
Yeah, sorry about that. I thought moving from the countryside might sort my internet out. Clearly not. Yeah, so I was talking about sort of Taproot and actually how people signal their support for it. So Charlie said it's a consensus, and that's completely correct. And actually today is the start of the new difficulty adjustment sort of epoch, if you like. And over this period of 2016 blocks, 90% of the blocks need to signal their support for Taproot. And if that happens, then we have sort of an implementation period that starts in November this year, I believe. So it's still a long way away, but actually it's quite a big step forward for Bitcoin. The last major upgrade was in 2017, which was called segregating witness, SegWit. So it's been a long time, but it sort of proves that, you know, people are behind the scenes in Bitcoin. I think it's quite a misconception for new entrants in the market that Bitcoin's sort of the outdated one. It's old news, but there's people behind it.
Okay, I've got a question here. Do you think Elon Musk would back a proof of stake coin?
Well, I think, yeah, I think so. It looked from the last sentence in his tweet yesterday. I'm sure they've seen that. He said that we're looking into cryptos with 1% of Bitcoin's energy per transaction. So I think that's. I feel like the whole thing was a company line, and the last sentence was they let Elon put what he wanted. It's a bit of a weird thing to put in, but I mean, obviously he's talking about proof of stake blockchains, Cosmos, probably something like Atom, Cosmos, maybe Ethereum later on. Who knows?
But you know, Tesla's a tech company. He's a tech innovator. What's he doing in Bitcoin? He should be creating new networks to solve these problems, shouldn't he? I mean, that would be the opportunity for someone like Tesla, where they've got a lot of clever software engineers. And it's the argument is that the reserve asset Bitcoin doesn't need to do much, doesn't need to have much functionality. It just needs to be valuable and loved and widely owned and secure, of course. But the sort of utility networks don't need those. Don't have the same requirements. They just need to do a job, and they don't need to be so valuable at the moment they are in this cycle, but no doubt they don't need to be because there's no requirement to have a cap supply and so forth when it comes to the utility. But of course, everyone wants to make a buck on the side. So I think, in the future generations of utility platforms may look at it that way. They might even be private networks, so private blockchains where we don't really care about some of the issues we care so much about with Bitcoin. Being decentralized and so forth. But certainly that strikes me that a company like Tesla could be scoring points with shareholders and environmentalists by going down that route, rather than throwing money at the Chinese to burn some more coal. Well, of course, Bitcoin is fully hydroelectric, as you know. In terms of inflation fears, do you think there's a big enough gap in unemployment to dampen the threat of exceeding the Bank of England's magical number of 2%? Crikey, that's close to crypto, isn't it? I think there's an inflation problem, and I'll bring that. I'll answer that, and then I'll bring that back to crypto. But there's without being specific on the UK generally, but I think globally in the developed world, this whole money printing thing into the real world is inflationary, and it's pretty clear that we've seen some bottlenecks in the supply chain, and we've seen people propped up. I think there's a lot of discussion in the crypto space. It's the same conversation we had in the gold market 20 years ago about inflation data is nonsense. It really isn't nonsense. It went up a lot yesterday. It's a lagging indicator, of course, and so people will point to lumber and copper. But the inflation data, the consumer price index, is the cost of living for the average person, and the average person has a pretty raw deal. They're not earning very much, and they have a pretty simple life. So they don't consume much copper. They don't consume much lumber. They don't care about Manhattan property or Monaco helicopter flights. So these are things that don't affect them. It's the price of baked beans, the price of fuel, and these sorts of things in a basket that is approximately weighted to do the job. Now, there's a version of CPI that takes out the volatile food and energy to try and get you core. Obviously, the food of energy is the input cost, so the inflation ends up there later. And yesterday we had the biggest print on that in America. Yesterday night, since the 70s. It was up 0.9%, I think, month on month, and 4.2% for the year. The 4.2% for the year is the base effect. That goes back to the low start last April when the oil price was negative, and so that's boosted that a little bit. And, I've always made the case that Bitcoin has been positively correlated to inflation. 95% of its appreciation has coincided with that. But, you can't be inflation sensitive when you're also caught up in hype. You might be extremely inflation sensitive when your price is 10K, but 100K, that's gone, if you know what I mean, because you've actually had 10x return when you're talking about inflation of a few percent. And the inflation data is not wrong. And I don't think it's manipulated either. I just think it's trying to do a job, and most people don't understand what that job is. It's literally trying to measure the cost of living for a poor person. And they're having a raw deal because their wages have gone up more slowly than even that low number in recent years. Not so much that the number's false. So, and then there's other arguments like the deflationary impact of technology and the aging population and the debt and all of these different things. But right now, the money printers go brr, and brr is winning, is outperforming everything else. So yes, inflation's coming, and I think it's going to be structural, and I think it's going to be great for hard assets like gold, silver, Bitcoin, and all the rest of it. So we're definitely in the right space. But it doesn't mean to say that a good inflation print should send the Bitcoin price up. I think we've had 10x performance. When you've had 10x performance in the last year, then you've kind of seen it coming. And then I suppose before I finish on that is, Michael Saylor talks about the money supply. The M2 number is going up every year at 20%. Well, it's not going up every year at 20%. It's gone up this year at 20%, or last year rather, and it won't go up every year at 20% because even that would be extreme for the authorities. I think historically it's been going up at 5 or 6%, in line with nominal GDP, which is we're going to see strong nominal GDP, and because the growth ain't real, most of it will be inflation. That's the point. Any thoughts on that, Tom?
Well, I think you're the expert on the macro inflation side, but to bring it to crypto more. So in the real world, if you like, a lot of companies sort of online sales, etc., have experienced sort of an up in sales or good business over COVID. What do you think has happened? Like, what's the effect of that on Bitcoin? Because no one ever really talks about it. Do you think this environment has been good for Bitcoin, for example?
I don't think it's the inflation that goes to Bitcoin so much as the desire and demand for an alternative asset that's credible. And there's so many credible arguments about Bitcoin. how your price is where the debate lies. Whether it's worth $1 million in 10 years or whether it's actually already achieved its goal. Who knows? But I think the underlying purpose is fantastic. As I said, I think the links are tenuous, and the inflation data is more of a real world phenomenon. So I expect it to have more impact on real world things. And is there inflation in the internet? I suppose there is. I mean, the cost of servers and the cost of energy and those sorts of things would probably be more relevant to native internet inflation, which I guess is something we haven't really explored or discussed. But I think higher oil prices, higher energy prices are coming. I mean, the ESG thing's really interesting. I think because it's really shaping events. And not in the way people think. People think it's making the world a lovely place, but actually, it's just going to put an almighty squeeze on energy costs. That's what's going to happen, and that's going to be pretty awful for the old world, because everything needs energy. And frankly, energy is probably the only input that really impacts the internet and the real world in a very similar way, because the internet's very energy intensive, isn't it? And of course the cost of computer hardware, but I guess at some point the price of that will stop giving us the gains that it has done in recent years. But Moore's law, it plods on, doesn't it?
100%. I think actually ESG, just to touch on that, because obviously I think we might talk about Elon quite a bit today, but I think it's a wider issue. I don't personally see. I think Bitcoin's energy consumption is huge, but I actually, as a space, I think it's so profitable that if governments subsidy green energy or better energy sources, that I think Bitcoin mining will be, especially from my own experience, will be one of the first sectors to go over to the green energy faster than most other industries.
We've got the next question, Tom. There's been an increase in new coins with humorous names being created and then being backed up by famous people. Do you think this puts a poor image on crypto?
Brilliant question, Pierre. Well, yeah, there really has been some pretty shocking names out there. But I actually, I agree. I think it has got a poor image for crypto. I think it's more poor usability for Ethereum and blockchains like Binance Smart Chain, because it has shot the gas prices up. I know my flatmates maybe bought a couple, and by the time he's selling it, he's paying 60% of his profits back in gas fees. And I think this brings on a bigger issue of Ethereum's gas issues, because actually, to have although it's hailed as utility, and it does have all the application in the whole of the space, really, things like that really do put it in a bad name, because you should be able to sweep those to the side, but actually they've become a massive part of the space.
Yeah, so if you're going to buy a coin, which obviously has no value, backed by a celebrity, which celebrity would it be, Tom?
Stanley Druckenmiller, a rougher investment, obviously.
a sort of financial guru.
Yeah. Well, it seems to be all celebrities and basketball players, and
call me simple, but I just buy one backed by a hot bird. Next question. Which digital assets should we be studying the hardest at the moment on a 5-year view? So what do you think there's real value looking ahead, given that there's been a lot of the altcoins that have really moved recently?
Yeah, I think I've said this before internally. We need to backtrack slightly, really. We need to look at real world application and actually the things that have an underlying value. I know I probably sound like a bit of an old value investor, but I think when you get to this mania cycle, you do need those things. So in an article a couple of weeks ago where I wrote about Maker, and Maker in collaboration with a protocol called Centrifuge, we're bringing sort of crypto-backed loans or sort of mortgage deeds onto the network, and people were loaning to companies in the real world. So that's fantastic. I think obviously that's one people should be studying, and so that is a part of a wider sector, DeFi. I think DeFi really has the opportunity to be disruptive, And I think within that, you have sectors in itself, lending, borrowing, staking, etc. All things that people globally who didn't necessarily have the access to those financial instruments before now do. And I think another side of that, maybe a bit more wacky, but has good potential, is NFTs. NFTs, unique assets of any kind. So the gaming industry and NFTs, I wrote about Axie Infinity. Without the gas fees, maybe they'll change to another blockchain, but that does really have a global wage aspect to it. And that's really, really useful for people with, devaluing currencies like Venezuela.
And the point about gas fees is really important because, part of tech is to be efficient, isn't it? And the Ethereum gas fees recently have been excruciating. But I just want to, make one really bullish point. And we had a conversation with James earlier this week with a firm I won't mention because it's confidential, about their token. And, we said, by the way, the arrangement you have, XYZ arrangement you have and with your token doesn't work for us. Could you change it? And they said, of course, this is smart money. And that's the whole point of smart money. It's smart. They can make it different for us than they can for another client, which I think is really, really interesting. And it just brings it home. In the context of, for example, in fund management or even in share classes for companies, voting and non-voting, these sort of things are really easily done. And it's just quite impressive. And knowing the old world as I do, it's a massive improvement on the way things are, how things will be executed in the future. So we'll move on. Is Ethereum overhyped? Well, we just covered the gas fees. The idea of Ethereum is fantastic, isn't it? But it's a bottleneck. It can't grow if the gas fees are as they are and go higher, can it?
Yeah, I'd say it's probably overused for its capacity, and I guess that comes with hype.
So it's eating its own tail, isn't it? Basically.
Yeah. Its technology is coming along at a slower speed than its adoption, and while that's bad now, it should be bullish in the future. Just don't pay too much in gas fees.
Yeah. Do you see NFTs to be the future of art? Will museums start showcasing NFTs?
Well, I think this is a good point. Another cracking question, Pierre. So we saw Beeple's artwork selling Christie's, 69 million. And he quickly became the third most successful living artist at that point. And I think you can't underestimate the monopolies that sort of auction houses and within art. So this is a whole nother art subsection, if you like, that they can really push. And I think it's only a matter of time before some futuristic museum shows that. Perhaps it will be in a metaverse, or you'll have to put your VR headset on to view it. But I don't think it's far away.
We've got another macro question. If governments let inflation run and run, but cap yields, will crypto protect investors in the same way as gold has done in the past? Well, I'll take that. Gold absolutely will love that environment. Absolutely, that's a perfect environment for gold. Is crypto gold? Well, that's back to that one again, Tom. Is crypto gold? So crypto is the gold of the internet, isn't it? Well, Bitcoin is the gold of the internet. And I think that's where we have to leave it. I have a strong view that it's not ever going to overtake gold in the real world. And I think the comparisons are good because you've got to have this debate. But it's just so obvious in the behavior that they really are they really have completely different anchors, and gold, you know exactly what it's going to do when the macro environment changes, and you see it on our model that's published on the ByteTree Asset Management website, how closely it follows the rules. This is not manipulation. This is just how it is. And of course, people get confused that gold goes down when inflation data comes through at 4.2. Well, it's looking at the long-term inflation data, which knew it was going to be 4.2 or close to it. So that was already in the price, and Bitcoin is really doing something completely different. I've no doubt that it's a hard asset, but it doesn't mean to say that in the short term it's going to obey the macro, the non-internet macro rules, the real world macro rules. But yes, if the dollar, if we have lots of inflation and interest rates are low and fiat currencies demise, then hard assets will win. Bitcoin's a hard asset, as is gold, as is a grand piano. I mean, I mentioned grand pianos because the 1920s in Germany, I mean, it was a hard asset. I mean, you could take a grand piano to Venezuela, it won't lose value. So you might not find any buyers, but the point is, if you have a new regime, then it's a grand piano again. So it will maintain its value through the period, and that's the point about hard assets. You don't expect a willing buyer during the hyperinflation, but it's about storing the wealth through it. So I think in that context, crypto is absolutely. The only caveat, I suppose, is that governments tend to be less friendly to monetary and financial freedom during periods of stress. So there is that. And I suppose the interesting question is, if you had a third world war, maybe not nuclear, that's a bit scary, but a sort of Second World War type scenario, and that's obviously very bad for the economy. And Sotheby's aren't going to be having top prices for their art pieces during such a time. What would happen to the crypto network during the war? Would it slow? So if you get leaving the price aside, but the utility and the functionality and the amount of usage in crypto, would that increase or decrease in a stressed environment in the real world?
Oh, I think that's got to decrease.
It has to decrease, doesn't it?
It has to, because of risk. It's a risk-off environment, and like you touched on before, although inflation everyone seems to say it's very positive, when it does get into bad times, it is risk-off. And let's be honest, crypto assets are, especially at the moment, certainly risk-on assets, and they've been very good at that. But when you have a disaster like a world war, I think it's got to be risk-off.
But I think just like the grand piano, the networks would come straight back to life when the trouble had passed. So I think in that sense they are absolutely hard assets. I think it's hard to dispute that. And okay, and we'll do the last question because it's 1:30, and our audience is already getting bored. I can tell 3 have left. So, what is the benefit of a Britcoin? Now, Britcoin is the nickname given by the Chancellor of the Exchequer of the United Kingdom, Rishi Sunak, on the digital pound. Tom, what do you think? Is a digital pound useful?
Well, I think a CBDC in the crypto world, yeah, they are useful. Even I think the Bank of England said themselves, we aren't as hyped about a central bank digital currency as other places in the world. I think Britain itself, I think maybe is going to benefit from efficiencies. Sort of banks will benefit, etc., etc. But I don't think. I think we're quite innovative as a country, so I don't think we necessarily need a CBDC as much as a country like Venezuela. For example, why that would be good is if Venezuela could rely on a digital currency from the US, then it would be much better for them. But I think even the Bank of England doesn't think we need the innovation of a CBDC.
Well, I point an article written, I think it was came out yesterday maybe, from Edward Chancellor, who's a very, very good guy, who's GMO, the fund manager. I think he's an economist by trade, and he wrote about central bank digital currencies being extremely inflationary. Because you go back to 2008 stimulus, after the crisis, there was huge money printing that went straight to the banking system and never really left the banking system other than through higher asset prices. And digital currencies, if the Bank of England created lots of digital money, then that money will end up, because it's cash, it's basically electronic cash as opposed to electronic bank account money, that actually goes out into society. And there are no limits to how much can be printed. So he thinks it's got the potential, central bank digital currencies have the potential to be massively inflationary for society as a whole. And the interesting point was that you could design, you could hard code digital fiat currencies to match GDP. Now that's fascinating, because that's very Austrian. So you could actually get the best, because the fiat, there's nothing wrong with the fiat system, it's just disrespected by by government, who just print more money than they should, and that's why they always end in tears. But if you didn't do that, if you actually managed it responsibly, then it's a really strong system. And it allows for friction between different countries and free markets and so forth. So this idea that you couldn't print more money than the economy required because a bigger economy needs more money, that's one of the arguments against deflationary currencies. How can the economy grow massively if money is appreciating in value? It's actually a bit of a headwind to that. So you actually want the amount of money in line with the economy, the same, pari passu. And so if you could hard code digital currency that could only print in line with official economic statistics that weren't cheated, then that actually might work quite well. I don't know how but that's one of the challenges of crypto and tokens is, let's say I've got this mug and I want to tokenize it. So I've got the token, I've got all the tech, and everyone's trading my mug all over the world. But then I just get the mug and throw it over the fence. I mean, what's stopping that from happening? So how can you actually ensure that events in the real world can be honoured in the crypto space?
Well, I think, hopefully, if you NFT'd a mug, you wouldn't destroy it. But I think, as I said with Maker, they use actually real world sort of underwriters, insurance. And actually, that's another bridge that they have specific people called operators, which based off that's what the interest rate is also based off. So the risk of that asset in itself.
With that, Tom, I think that we're going to come back next week.
Brilliant. Yeah, awesome.
Can you write something interesting, please?
I'll try.
Good man. Thank you, everyone.
Cheers.